Okay, so Signal Centre was formed back in 2009, and we were set up with the purpose of providing technical analysis and trading analysis to a variety of market participants. It started off being sort of banks and hedge funds that were being provided with the analysis that we were providing on a daily basis. It then grew out to a bigger retail following, and we became partners with a number of retail brokers, likes of IG Markets, Saxo Bank, and many others, to provide analysis directly into companies' trading platforms, so that we could provide clear, concise strategies for all market participants, whether they be beginner or advanced traders of financial markets. And we provide actionable trading ideas. The benefit that we have by being a third party within these trading platforms is that we can get across our opinion. We aren't conflicted by coercing people into trade. You know, we are unbiased, and we just look at a chart and offer an opinion on where we feel are the best opportunities to make money on any particular day. So we generate these ideas on the most active markets, and that's across multiple asset classes. We focus on the most popular foreign exchange markets, indices, commodities. We've ventured into a few cryptocurrencies, as well as some futures markets as well. And as mentioned, we partner with some very renowned brokers and platforms across the globe. And overall, our mission is to make sure that no trader ever trades alone. This is the team. As I mentioned, Steve in the middle. I've got myself on the right-hand side and Ian Coleman. I've been involved in financial markets for 17 years now across a variety of roles. I started out involved in broking, moved on to trading, portfolio managing, and then analysis. So I've really worked across the spectrum of financial markets. Steve in the middle, he was involved in trading on the live floor in the open outcry markets. Thoroughly knowledgeable on all things technical analysis. He's soon to be lecturing on the Society of Technical Analysts circuit. So if you're taking that course or familiar with those guys, then be sure to look out for him in the coming months, as and when we get back to some sort of normality. And of course, we've got Ian on the left, who has been involved in financial markets, or foreign exchange markets in particular, for over 30 years, and has done a lot in the sort of educational space for teaching traders how to trade. And that completes the team. So I've touched upon a few bits about mission and why we exist and how our business has evolved over the last few years or so. We started off by servicing banks and hedge funds, and we've moved over to servicing sort of more individual traders via these broking platforms. And we want just basically to give traders a better chance of a more longer and more successful career when it comes to trading. We've all seen the stats about how many people lose money when it comes to trading. So being an unsupported investor, we feel by providing them with the analysis that we've got, or and educating these people how to approach financial markets, they've got more chance at a more successful career compared to the average unsupported investor. There's also been an explosion, as we all know, in signal providers throughout the last couple of years, boomed as a result of social media. And as we know, a lot of this can be portrayed in a way that makes it a little bit unrealistic. People driving fancy cars, and that's not to say people don't do that as a result of trading, but they've made this sort of get rich quick approach to trading feel more accessible to people. And trading is very accessible to people, and that's great. But the journey is difficult. You're trading against the most educated minds in the world, the fastest machines, and trying to compete against these guys and making money consistently is no easy task. So we try to work and stand against these poor quality education providers. We provide regulated signals. We're an FCA regulated firm, and we have the highest ethics and morals when it comes to trading and the financial markets. So who do we now service? Well, everybody from the beginner trader. People often follow the signals who are brand new to trading. They're looking for some guidance. They're looking for areas of where to get involved in the market. And our service is never just a case of here's a level to buy, here's a level to get out. We're trying to educate people by giving them some rationale, giving them some reasons, giving them a chart, annotating those charts, and making sure that people understand why we're buying or selling something, because if they don't understand that, or they're not willing to try and understand that, then they're ultimately going to struggle to learn and have any sort of successful career in trading. So the next level on is obviously the intermediate trader. These are the guys that, we're all on this same journey together, and we'll go through these same emotions. The intermediate trader will be the guy who's stuck it out for a good few months. He's still not really making any kind of progress, and therefore he's looking for some additional confirmation. He's looking to see what someone who is an expert thinks, and then he can look at his own analysis and can compare and contrast, and to use it for confirmation tools. And keep learning, keep that progress, going forward, and learning about financial markets. And of course, we have expert traders as well, people that have been following what we do for a number of years. And they're using our signals on a daily basis for a take on, or a different take on the markets, to either validate their own strategies or provide a second opinion. So as I mentioned, we are primarily technical analysts. We pride ourselves on keeping the analysis simple. We want to keep the charts as clean as possible. You'll see charts all over the financial or FinTwit these days, whereby they're can be a bit messy. They can be full of oscillators and indicators. We just want to keep it really as simple as possible, and it doesn't really need to be more complicated than that. We cover 42 different markets on a daily basis. That covers everything from FX, as I said, bond markets, indices, commodities, and a couple of cryptos. We always have an opinion on each market, and these are reset every day. So the bulk of our analysis comes out in the morning with the European Open, and then we put some more content out around the US Open, and then again before the Asian Pacific session, which is the European close. So all the analysis comes with a call to action. We have a complete exit strategy for everything, so we never leave anybody alone on their own. If they're taking our signal, we want to see that through with them and make sure that they're not looking and questioning the charts and thinking, what do I do now? All of these ideas come with a specific entry level, stop loss, and to take profit levels, and we will provide management updates throughout the day to help people throughout the duration of the trade. Aside from the technical analysis, of course, we provide education, and our aim is to teach everybody or teach traders everything we know in order to increase their chances of success. We've got a big library of online resources to help people. We've got courses, we've got one-to-one strategy meetings, as well as small group workshops that we put together. All of this is available via our premium membership. In terms of the delivery of our signals, people sign up via the website and they will receive our signals via our widget here, which we have, and that will provide you with the entry levels, target levels, stops, and the reasoning as well. Once you click onto these ideas, you'll see all the information behind. And as I said, we cover short-term trades, and we also cover, or mainly cover, intraday markets as well. Just click that on. Telegram is another platform that we've become quite active on in recent weeks and months. It's a very good way of connecting with traders on a real-time basis and delivering information directly to smart devices. We can quickly get information to people so they can see what it is that we're doing and be updated on a real-time basis. And we've also built a couple of trading communities as well, whereby people can converse and share ideas and approach the analysts, myself, Steve, and Ian directly, and talk about markets and opinion on markets. Video analysis is something that you touched on at the start there, Simon. We currently produce a video of around about 15-20 minutes every morning, and we call this Talking Ball. It's streamed live on YouTube and other streaming sites. And basically, it's just a very informal rundown about what's going on with markets, what the key overnight events have been that are moving markets in the morning. We're talking about key things that we've spotted on charts. We're talking about what we can expect from the day ahead. And also we do an element of live trading on there as well. So each day, the three of us will make a live market call, and we will follow the progress of those, and they will be closed out at 9 o'clock each day. So provide us with a nice talking point for the next trading session. And we're running a little bit of a league table between the three of us, and obviously talking about the overall progress of the account based on how the returns would have looked if we had risked £1,000 at the outset, and where we would be now with a with a real life account. So plenty of fun to be had, and hopefully some decent insight for people on how we approach markets. So these videos are going to start going off now, but you can check those all out on YouTube. Transparency is obviously a very important point as well. We touched upon the fact that we are FCA regulated, and everything that we do is documented. It's all time-stamped, and we provide these trade ideas on a daily basis, and every single one is logged from a performance perspective. At 9 o'clock each day, the signals that we post on the European Open and the US Open are closed off, and then they're reset the following day. And with the Asia Pacific markets, they run from 4 p.m. until 4 p.m. the next day. So this is just so that we can have a sort of a clean slate and a clean start, and then look to produce new analysis on a daily basis. So this goes back to 2018. This is the performance chart. It's a simulated returns, because in that time we've posted over 5,000 trades. Obviously, trading every single one of those would be quite difficult, especially with the margin constraints that are now in place on retail traders through the ESMA ruling, which I'm fully in support of, because quite frankly we don't need to use the amount of leverage that some of these companies have got on offer, and that tends to be what gets people in a bit of trouble when trading markets. So I'll come on to a bit more about that later. But this performance chart here is based on risking 1% of trading capital on a per trade basis. That's what we generally suggest. And obviously you can see here on the left hand side there's a lot of performance metrics that break down the performance over a period of time. As you can see, the win rate over that period of time is actually less than 50%, and overall the performance is still pretty good. Win rate is not something that's too much of a concern for us. I'll come on to that in a short while when I start talking more about trading and live trading and how to set up. But overall, quite happy with how that looks. And bottom line is we're trying to make some returns for the people that are following the ideas, and we've done that over that period of time. So we did win an award quite recently. I just wanted to stick that in there as a bit of a boast, I suppose. We were announced the best FX research provider at the Technical Analysts Award for 2020. Normally this is accompanied with a nice fancy dinner and a night out and a few drinks, but unfortunately COVID-19 put pay to that, and that never happened. But we still get to keep this nice shiny logo and stick it at the bottom of our emails and put it on our website. And we was also finalist in some other categories, best in commodities research, equity, and equity research as well. And just for the year ahead, we've all been working pretty hard. Fortunately, financial services has been one of those sectors that hasn't been overly hit, in that we have still been able to work. Financial markets, obviously, a lot of what we do is online, and therefore we've been able to become more creative and come up with new ideas and be innovative. And we've got some new products that are coming in 2020, and we're really trying to sort of improve the offer where we can, adding new trading courses and some sentiment products as well, which are all very exciting. So now I can move on to some short-term trading ideas and some setups. Hopefully this will be of use. What I'm going to go through is how I set up a short-term trade. So kind of my morning routine, if you like, when I come into the office and start looking at the charts. And I try and highlight the best levels to trade on a daily basis. Don't forget, we're trading intraday markets here, and these close off every day. So at 9 p.m. that's the line in the sand. I'm looking within that period of time from, let's say, 7 o'clock in the morning until 9 o'clock at night. Where is the best level on that chart for me to try and make some money? So although we produce analysis on 42 different markets, realistically we're only going to get triggered on maybe 3 to 10 of those ideas at most. So we really are looking for the most higher probability opportunities to trade markets that we believe that we'll find on an intraday basis. So I'm going to talk about positioning for big moves, because obviously when we only got this short time frame, we want to make sure that we get on the biggest moves that we possibly can. obviously going to talk about the importance of risk reward as well, and that comes back to what I mentioned about the win rate. If we have 45% win rate, as we displayed there since 2018, how do we compensate for that? And the answer is through solid risk reward and having a really strong approach to that, and an unwavering approach towards that as well. And also going to talk about why position sizes matter, and this is a really key point, really, because a lot of people, when they're new to financial markets, will make the same sort of mistakes. And one of those big mistakes is that they will just simply trade too large for what their account can handle. I'm going to show you some examples of that using our profit and loss spreadsheet for why that matters, and how it can make a really, really big difference with your trading. Just before I move on, Simon, are there any questions that I can address? There's one I just seen pop up, which I can address, which was one gentleman asking about if we're available via the IG trading platform. The answer to that is we are Signal Center, but we rebranded as Signal Center a couple of years back. We were PIA first prior to that. IG never actually changed to Signal Center because we'd been on the platform for such a period of time under PIA first. Therefore, they didn't want to sort of upset the balance or the trust that had been built up for the PIA first brand, so it was actually left as it was. So hopefully that answers that question. I'm just going to flip over to some charts. Okay, so my trading toolkit, which was on the previous slide, these are the what's in my arsenal, what I look to use every single day, and just remain consistent with that. I think that's one of the key things, is that the approach that that we all have is very consistent. There's 3 different analysts within the firm, and we all have different styles, but we're all very committed to those styles, and every day we'll come in and look to produce the same type of trading idea using the same kind of setups. And these are the setups that I'll use. So I'll always look at a 60-minute chart. In terms of how much price information I need, as I mentioned, I've only got this period between 7 a.m. and 9 p.m. to try and get in a trade, and therefore I'm looking for the best opportunity to try and make money within that market. So this is a euro-dollar chart. It's a 60-minute chart. One of the other tools that I like to use is average true range, and I've got this up here as average true range levels. Now what this does is it throws up a band around the price action, and how it's calculated is taking an average of the true range, the average true range for the previous 20 sessions, and then it's the average is applied to the closing price at 10 o'clock below the 10 o'clock below the close. So this is the average true range minus the low, and the average true range plus the close, sorry, of the previous session. So we get a nice band around the price action. And why that's important for me is that average true range is often used by people to place stops. So they'll place them 1.5 times or 2 times above the average true range. And if you're in a position where a market is moved within that average true range and it goes above that average true range, then what we are likely to see in some instances is exhaustion, because the market hasn't typically moved outside of that range very often, and when it has, you can often get a reasonably decent reaction one way or the other. So that's one particular tool that I like to use. The other is just a simple Fibonacci setup, and I also like to try and identify naked levels, and I'll come on to that shortly, which is how I try and sort of apply a sort of a sniper entry, if you like. And the final point in the toolkit is the position sizing calculator. That is really important, and I'll come on to that shortly. So Fibonacci, so I talked roughly about the ATR bands, and obviously we'll come on to that again shortly, but the Fibonacci approach, obviously we're hopefully all familiar with the numbers. The ones I tend to focus on most are the 61.8, the 78.6, and the 88.6. And why these levels? Well, if any of you are Elliott wave theorists, then you'll know that the third wave in the Elliott wave pattern is usually the impulsive wave or the impulse wave. And any trade, in my mind, has its maximum potential for profit and its minimum risk when the entry is closest to the point of the start of a swing. And for the third wave to begin, the second wave must not exceed the low or the high of the first wave. So I'm looking for deep corrections, basically like the 78.6 or the 88.6, because I find these are kind of the last chance for that theory to be proved right. So if we have, say, a wave one, whereby the price has extended all the way back up to an 88.6, as long as it doesn't break this high here, then there is still that potential that we're making a lower high, and therefore we could still be in a downtrending market, and we can almost have this sort of elastic approach whereby the markets have retraced back, and then you're just penting up, some frustration here before then, we get a big impulsive move to the downside. So that's why I like to use those. Obviously people talk about 38.2s and occasionally 50%, but I'm looking for deep pullbacks in price. Now this is just let's just clean this chart up. So this is how a chart would look for me coming in the morning. I don't have any annotations as such written onto the charts before I come into the session. I just want to look at it on a standalone basis and highlight where I feel is the best opportunity for me to make money on any particular day. So this is the euro dollar chart as we discussed. I'm only looking really at the last sort of 10 days to 20 days worth of price action, and I'm looking for swings in price and then looking for retracements within those swings. So looking at this, I would look at this immediately and think that was a swing high there, that was a swing low there. So within here, I'm looking for a retracement somewhere around here to think about trying to sell that market. That's just instinctively coming in and just looking at that. That's what I want to do. Looking over the last 20 days or so, price action has been pretty choppy, pretty good two-way markets. If I'm looking at it from a trend perspective, I can quickly identify there that there is a lower high, and therefore you could suggest that we're in a short-term downtrend. This is very short-term stuff because, as I said, I've only got that short window of opportunity to try and make money. So I've identified that swing, first of all. Then my next step is to draw on the Fibonacci's onto that swing high to that swing low. And as I said, I'm looking for the 61.8 to the 88.6 and anything in between. So ideally what I'd like to see is a swing above the 61.8. And then somewhere around here, I'm thinking that I want to be looking to get short. You can see on this instance here, we had a decent correction back up to the 61.8, and we saw some selling occur, quite an impulsive candle there, which sent the market back down to retest these lows here. But what I would like to see is another go maybe up here and prove to me that the selling is strong, and that at some point around here we're going to flush out any potential longs that have been buying around here. They're going to be looking to take profit, and I can use the ATR bands for a bit of a guidance on that. So anything above these ATR bands or below, if I'm looking to buy, is where I'm looking more often than not to try and do business. And as I touched upon earlier, if you get a move above these ATR bands or below these ATR bands, you're more often than not going to see the market looking a little bit exhausted, because it's already done quite a lot today. And if it's up here and we're approaching some key Fibonacci levels, then the chances are that it may not have enough impetus or impulsiveness to continue breaking high. There may not be enough buyers, and as I've already said, we've got this potential downtrend in place as well. So I'm thinking in and around here we could get a little bit of buying fatigue, and the trend that potentially is in place could start to work again. So this is a live chart, so I'm hoping at some point today, or maybe overnight, or maybe it may even be tomorrow, we're going to see a move above the average true range bands and into one of these Fibonacci levels for me to try and get short. Now the other levels that I'm looking at to try and get short at or try and do business at is these naked levels, which I refer to. And what do I mean by naked levels? Well, I've already said I'm looking to trade a pullback in most instances. And in order to get a pullback, you need to have had an impulsive move in the first place, or a swing move in the first place, in one direction to begin with. Now, what I'm looking for is to find out where this initial move began, and has that level retested that level where the initial move began. And if it remains untested, then I refer to that as a naked level. Now, I'm just going to drill into the price action here, just make this a little bit larger. So I've identified this as the swing move that I'm interested in, and I'm interested in doing something around about a pullback, in and around a pullback up here. Now I've got a couple of levels on this chart which stand out for me, and if you look at these candles here, this red candle here and this red candle here, they're big selling candles. They're impulsive moves to the downside, and shortly after that they've been backed up by more selling pressure before eventually going down to reach this swing low here. Now these candles here have just broken through these previous lows without looking back at all, and we've seen a little bit of a retracement, but we haven't seen that level there, that low there, we haven't seen it retested. And that is what I'm referring to as a naked level. Ideally, you would like to see, from a technical perspective, a breakdown below support, a pullback to retest that level before then moving lower. Well, we didn't quite get it. We got fairly close, but for me, that remains an untested level, and something that I think at some stage the market might be interested in coming back to try and retest that level before then selling off again. And there's another level here from this candle. We've seen a break below this low, and we didn't see any kind of pullback to retest that low there on the impulse, before the impulsive candle to the downside. So that for me is potentially another level that I'm interested in. Now, when these levels then start to marry up with Fibonacci levels as well, with the 78.6s and the 61.8s, and in some instances the 88.6, and when they're also above this average true range band, that's when I'm started to get interested about doing something on that chart. Now, you might look at this and think, okay, well, there's a resistance level there. It's got to get above that. And yes, it does. And it may well fail on a retest of that level. But how many times have you seen in the past where you've been trading markets, when we see markets go and test these levels here, only just to be stopped out by a couple of ticks because it's just had that little bit of a burst above? In the market, you can be sure that there are going to be people that have got stop losses above this level, because they'll identify it as a swing high. So if anybody's gone short down, in and around here, maybe they got short here and caught it very nicely and they've taken some profit down at these swing lows. But what may happen is that someone may have got short down here, and they may be putting their stop loss up here. So you may get a test of that level. You may then see a little bit of a poke above from the market, maybe a wick candle that will stop out a few of these participants that are going to have stop losses here, only for it then to reverse in the direction that they initially expected to go. So that's what I'm looking for. I'm looking to take advantage of the fact that there'll be market participants in and around that level there that are likely to get stopped out. I've got a decent level here where I feel that the market needs to come back to retest. I've also got a 61.8% fib level, and it's also above the average true range band for the day. So if we get up to that sort of level, I'm really interested in placing a speculative short, because if it then starts to rally considerably higher, then I know that there is some buying strength here, and this is going to get taken out pretty easily, and then we're going to rally on higher, at which point I'm wrong. That's fine, that's not a problem whatsoever. But I feel that there could be an opportunity here to place a speculative sell at that level. And in terms of where I would place my stop loss, well, I've got another level quite close by, so I'm faced with a choice. Where do I put my entry level? And I would probably go with the closest one, because I always like to try and get into the market if I can. But in reality, this may even be a much better level to try and trade at. So to be safe, If you're going to trade the first level, then you need to probably have your stop loss above that level as well. So I'm going to place it above this cluster of price action here, just to give myself a little bit of a safety net. So what we've got 35 ticks as a stop loss there. And then quite simply, just going to look for a move back down to the previous swing lows, or where there's some key support. And we've seen the market hold on this occasion here and here as well. So I'm looking at around about 2.9 as a risk reward ratio on that trade. So that is a sort of a typical setup of something that I'm looking to do. That's where I'd favor placing a limit order to try and enter the market. Of course, I am familiar with other people will be looking at this chart and thinking, well, hang on a second, Joe, you got a low there, you got a low there. If it takes out this level here, then you may have a double bottom. Yes, that's absolutely correct. But, you know, I've assessed looking at it with the experience that I have, that I feel that the pressure is to the downside potentially here. You know, if I scroll back a little bit further, I can see we have prices up here, you know, highs here, and they're all lower each time. So I'm quite comfortable that the short-term trend is favoring the bearish side for now, which is why I'm looking to try and get short on the market at that particular level now. So I'm going to clean that up and then just try and put another example over to you, a live example again. Let's have a look at cable. So again, faced with a clean chart, this is how I'd come in to the office in the morning and look at the charts. And you know, the first thing I'm hit with there is that we've got a downtrend, and I'm therefore going to be biased to be looking at the short side. You know, let's start by drawing that on just so people are with me. Clearly, to me, looks like a downtrend, and therefore I want to be looking for opportunities to sell. So then I want to drill in deeper into the price action and look for that swing move, which I'm looking for a retracement of. So I'm going to start from here, swing high that we saw on the 24th, down to this swing low here that we saw just yesterday. So now what I'm looking for is a decent pullback or retracement within this swing phase here. So I'll get the Fibonacci's out again, start at the high, down to the low, and again looking for some kind of move above or around the 61.8 to the 88.6. And then we'll look at the ATR bands as well. As you can see, we just had a little nibble above that and bumped into that bit of resistance there. So that can work as well. That can be a way of doing it, but I tend to try and be more consistent and stick to trying to find opportunities with fib levels that marry up at the same time. So as you can see, a bit above that, we've got that 61.8. And again, I'm looking for some sort of naked level where price action moved to the downside in an impulsive manner, and where that sort of down move triggered, and looking for the market to try and retest that. So where I'm looking at is this candle here. We've got a Marubozu candle. We've started the hour at 7 o'clock up here, and we've closed it on the lows. Therefore, there's been selling pressure throughout that hour worth of trading. And that really was the catalyst for that quite sharp decline to the downside throughout the trading session on the 26th. Now, when that move started, we did see a little bit of a bounce back, but at no point did we go and retest that previous candle, the low of that previous candle, that doji style candle there. So I've got that lined up with a 61.8% candle, line on my chart. And therefore I'm looking for a retracement up towards that level today. And that again is above those ATR bands. So I think if we see a move up here on an intraday basis, bearing in mind, I would have done this earlier this morning at sort of 7 o'clock. I would be looking for these sort of levels. We've seen a really aggressive move from cable to the upside. We've established that overall the pair is in a downtrend. We've got the ATR levels on here, so already we are getting into the realms of probably being quite exhausted on the day, unless there's any sort of huge fundamental news out with sterling that I'm not familiar with at the moment, or weakness on US dollar. So I'm looking to get short in and around this level here. You know, quite accurate really. I can often adjust them slightly for the spreads, but most platform providers and brokers offer pretty tight spreads these days on the major forex pairs, so it's not overly a concern for me. That is at 124.26.5 as an exact level, so I'd probably just put that at 24.26 to try and get short. So there is a chance that may happen now between now and the 9 o'clock close. And again, just be looking to target a move back down to those swing lows. Now, in this instance, we have established that it's in a downtrend, so there's no reason why you can't try and target lower. But just for the purpose of setting parameters for the day trade, I'd be looking to try and target a move down to those swing lows. That's why we have the second target in our trades, so that we can target something potentially a lot lower if we feel that there is an opportunity to do so. Now, in terms of the stop loss, so we've got the 78.6 up there. Often when you're looking for these opportunities, when you're trading above the ATR bands, you'll pretty quickly find out whether or not you're going to be right or wrong on these trades. They tend to work very quickly, or they don't work at all. So you can place these stops quite tight. I always like to give myself just that extra bit of padding where I can. So immediately I'm drawn on the left-hand side of the chart to try and find spikes or price action previously where I feel that the price could potentially go and test, and I'm looking to stick my stop loss above that. So I'm immediately drawn to this candle here that was on 9 o'clock on the 25th of June. And if we see price get above that level, then I'm quite happy to admit that I'm wrong on this trade, and that's a cue for me to get out. So I'm going to bring that just down to there. So we've got about a 42 tick stop on that, and a nice 4.2 as a risk reward ratio on that trade. And obviously I talked about earlier that win rate again being 45%. Well, if 45% of my trades go on to be winners, and if they're winners they go and hit 4.2 as a risk reward ratio, then we're going to be doing pretty good overall. That's not always the case. We're closing these trades out at 9 o'clock for the purposes of our profit and loss. And personally, when trading these ideas, I actually like to use a trading stop method on these ideas, just because I don't ever like to get into a situation where, for example, if this were to go on hit this level here and start moving nicely lower, if the price action, sorry, just to get rid of that. Say if we're down here in the price and that's still my target and my stop loss is still up here, then my live risk reward on that trade is now 0.56. Well, if I was faced with that as an opportunity to trade just now on a standalone basis without knowing anything that I know previously, there's no way that I'd ever take that trade. So I'm looking to move stop losses down along the way. In this hypothetical scenario, we've got a little bit of a swing high here, so maybe you might be thinking about putting stop loss above that. I'm still not overly enamored by the idea of that because the risk reward is 1.6. I can stomach maybe down to 1, but anything less than 1, then I'll be looking to really tighten things up, and that may mean that I do miss out on a number of trades that go and hit the full target, the 4.2% return. But more often than not, I'm quite happy just to keep securing winners along the way if I can, and have these trades managed. And also what the trading stop loss does, if any of you use them, you'll know, is that they can take out the emotion of trading. I don't have to sit there and worry about whether or not my trade's being managed, or have to second guess what the market's going to do. It's just a very consistent way of approaching the markets, and I'm just comfortable that I know that my trade is going to be looked after by my trading stop loss. And I've programmed it to always make sure that my live risk reward ratio is greater than 1 to 1. So if it ever goes to a point where my risk reward ratio is worse than 1 to 1, in fact it's 1.5 is what I've programmed it to, then it will automatically start ratcheting that stop loss down, or if it can't find a level to do that, it will just automatically close out the position. So these are live examples, and obviously they haven't hit any of the target levels that I wish to get in. So I want to show you a trade idea from earlier in the week that did work out quite nicely. And of course, I've showed you we've got 45% win rate. So for every one of these, you can be sure there's a loser that does the opposite of what I expected to do. So I'm not telling you this is a holy grail system by any means, but this is just my personal method that I found works for me on a consistent basis and works over a long period of time, providing you have good money management strategies in place, and also you've got an effective strategy for managing trades once you get in them. So this is the previous example that we've got on the chart. This is a New Zealand dollar US dollar chart. This is the swing that I've identified. So I'm going by this high here down to the low here. We didn't make a new low there on that gap lower on Sunday night. So quite happy that this is the swing phase that I'm looking to try and trade within. We get the fibs on from the high to the low, and then we're looking for anything really above the 61.8. As you can see, we had a decent attempt here. We pretty much hit the 61.8 to the tick before then moving lower. Let's just get the ATR bands. So that did actually go above the ATR bands, but I didn't necessarily get a naked level at the time. So that's not the trade idea that I'm referring to. What I'm looking for here, again, is above the ATR to try and get an entry. So we've got the black bands, and then I'm looking across to the left-hand side to try and find out where, if anywhere, we have an impulsive candle that triggered some price action movement to the downside. So we had this big sort of long-legged doji that formed here. That was kind of the high of the move. Then we started heading lower, but this is the candle that really stands out for me. It's a big impulsive candle. We started there at 65.28 at the open of that 60-minute candle. We sold off aggressively, closing pretty much on the lows of the hour, but we didn't see any meaningful retest of that previous candle prior to the impulsive candle. So we've got this little doji here, and what I'm looking for is a retest of that level at some stage throughout the retracement of this swing move. And then I'm obviously looking for it to be above 61.8. That doesn't marry up with a specific fib level. It's a little bit in no man's land between the 61.8 and the 78.6. But as long primarily as it's above the ATR bands and we have a naked level to try and target, then I'm quite happy to look at getting a trade on there. So how would that look? So we'll be getting on bang on that level. We've got 65.24.5. As I mentioned earlier, I'd sort of average round that down to 65.24. I'd be looking to target a move down to those swing lows. And in terms of a stop loss, well, I'll be looking to the left-hand side for some clues on that. We've got this candle that started the whole move and created this naked candle in the first place. Above that, we've got a 78.6. I want to give it a little bit of padding, so I'm just going to go a small bit above that 78.6 and look at any sort of candles that may be of interest, and I'm going to target that one there. Decent looking candle which provoked some selling, and I'm just going to place the stop loss just slightly above the high of that candle. So we've got a stop loss around about 29 ticks on that trade. Now this is a replay chart, and I know this one works out because obviously I wanted to show you a live example of this. So I'll just click. Oh, that wasn't supposed to happen that way. Bear with me. Okay, so I've drawn on the trade, and then let's click play just to see how that played out. So there you can see we got that big spike up and a reaction to test that level there that we've highlighted, and immediately it was met with some indecision, met with some selling interest. We saw a little bit of a spike above, but already then we started to see quite an aggressive move back to the downside. It didn't take long for that to work. So that's what I like about these levels. As I said, if they're going to work, they're generally going to work quite quickly, and that suits me and my mindset, because if it's not working, I'm not the sort of person that wants to sit there and wait for something to play out. I really want some instant gratification from these trades, and I feel that this method provides that. So you can just see how that played out. Once I get to being 1R on side, so when I'm 29 pips on side in this instance, that's when my trading stop loss starts to kick in. And I think actually in this instance, we had a decent move to the downside. My trading stop loss had kicked in, and I think I was actually stopped out on this spike up here, which is unfortunate, but that's often the way it can go, but you can see these moves play out quite nicely, and it hasn't hit the target, but there's plenty of meat on the bone there for you to take some profit out of that trade, and particularly in the sort of time frames that that we're looking to trade within. Now, the final piece of the puzzle is talking about position sizes, and I'm just going to quickly bring up this. I mean, there's plenty of other options available online, but my FX book have got a very good trading calculator that you can use. And the reason I like to use it is because it can give you exactly how much you're risking on a per trade basis. And we like to risk 1% per trade. That's how we run our positions. We have obviously the pot of money, or that's how we suggest people trade, is that they have a pot of money and they look to risk 1% per trade on each trade. So let's say you have an account size of £5,000. Your risk ratio is 1%. And let's say you have a stop loss of 30 pips and you're trading euro US dollar. You click calculate, it will tell you how much money you're risking, and it will also pre-calculate the lot size for you. So if you're going to trade this euro dollar position with a 30 tick stop, this is the lot size that you should be trading in order to risk this amount of money per trade. Now, when we're trading, we don't treat any trades any differently to any other. It's just another trade. So we don't add any different weights to these. We'll always risk the 1% per trade. We have no biases or tendencies to, if we really fancy a trade, to add 2% or 3%. That's just not how it works. I think the key here is just the consistency of how we trade, and just keeping that risk a constant figure. The other thing about the percentage approach is that over the course of time, if you're successful, inevitably your account balance will grow. And if you continue to risk a fixed percentage per trade, then your trade sizes will increase with the success that you have with your trading. And therefore, you'll benefit from the impact of compounding over a long period of time. One thing I want to touch upon quickly, this is our profit and loss sheet since the start of the year. This is only the trades that I have recommended. So there's 3 of us. I haven't added all the trades in. This is just purely the trade ideas and the markets that I cover, using a very similar approach to what I've just showed you now on the screen. Now, in that time period, we've had 350 trades that have been triggered, 176 wins, 168 losses. So the win rate actually since the start of the year is just above that 50% level. Now, the sized R is taking into account the compounded effects. Drawdowns a little bit higher than what I'd like, obviously. That's historically a bit of an outlier, really, but that's the choppiness that we've seen in the markets. I think over the last few months or so, since the start of May, there's been a bit of a drawdown in performance, which I'm not overly worried about. I trust the model and the approach. That will come good over the course of time. But what I really wanted to draw your attention to is this here. So this is the capital that you have on your trading account, and this is how we go about position sizing our trades. We'll risk that 1% of capital per trade. Now, it's all too common for new market participants to risk far too much on their trading accounts, and I'll show you the impacts of this just by risking 2% per trade. As you can see, you're now starting to see big swings in the profit and loss. Yes, you're making more money, but your drawdowns are now exceeding your uplifts on the account. And that becomes a problem for a whole manner of reasons, psychology being the number one. If you're starting to see big drawdowns on your account, is that going to start altering your thought process? So you're going to start making rash decisions because you're trying to chase the market. How is that going to upset the balance of what you're doing, and how you implement your trading plan? 2% again is still pretty low, but I've seen instances where people are risking 5, 10, if not 20% of their trading account. Or if we just change that to 5%, you're dead basically. You've drawn down 81.5% of your trading account. You're losing money overall by risking too much on your account. But it could be that you've got a rock solid strategy there that's working for you, that would be making money if you were just a little bit more patient and were a little bit more focused on the longer term. and not risking as much on your trading accounts. So that is, you know, a key takeaway from this is that position sizing really is a key point to consider when trading markets, and making sure that you don't risk too much on a per trade basis. And I know some people will have reservations about, you know, trading so little. They'll be like, oh, well, I'm not making enough. I'm not excited enough by it. Well, making money for me is exciting. It's a hard process. And I'm not overly concerned about making money all in one go. This is the monthly returns of my trading for Signal Centre since the start of the year. And on average, I'm making about 4R, as we call it, or what would be 4% per month. And that really isn't to be sniffed at, regardless of how big or small your trading account is. And I'll give you a quick example just by using a very simple compound calculator. This is something I bring up all the time in webinars that I do, and when I speak to people, just to try and bring them round to the idea that, you know, this is about long-term goals and staying in the market for the long term. So let's just take again that £5,000 balance. If you're making 4% a month or 4R a month, and you do that consistently over 10 years with that £5,000 balance, and we hit the calculate button, your £5,000 is turning into £500,000 in 10 years. And that's without you adding any additional money to the account. So, you know, by taking a long-term approach, using the impacts of compounding in your trading, and not being in a rush to make money, and having a, you know, a super tight strategy, you know, there's plenty of money to be made in these markets. You just not got to be in such a rush to do it. And, you know, I may only get triggered on 5 or 6 trades a week, but if I'm making that 3 or 4% a month, then, you know, I'm on course to achieve what I want to achieve, and everybody can achieve what they want to achieve with those sort of numbers. So hopefully that was insightful. Just a bit of an insight into short-term trading. Just as a final point, and as a special offer for joining me today and for being part of this Scandex bootcamp and working with Simon again, we are offering a 40% discount off of the standard monthly price of £24.99 for 12 months access for £179. And as I've mentioned previously, you'll get those 42 market signals each day. You'll get direct access to myself and the other guys via our community group, and plenty of other content as well. And if you're interested in redeeming that offer, then please just get in touch with myself directly on that email address at the bottom there, joe.neighbour@signalcentre.com, or via any of the other social outlets that we are active on. So Telegram, Twitter, YouTube, or directly via our website. Thanks for listening, guys. Any questions, Simon?
Thanks, Joe. Yeah, yes, there are. We've got just a couple of minutes, so I'm going to go back. Some technical questions that we're not going to have time to go into. Michael says the upward price and momentum of the pound dollar looks quite strong, maybe poised for a breakout from the downward channel. What do you think about that?
Yeah, it's very possible. You can't rule out anything, and I'm very happy to be proven wrong. You know, I'm not. You know, I don't have the holy grail when it comes to trading, but you know, I'd like to. Let's just get that chart back up. So yeah, indeed it could break out, but as I said, I'm looking at this downtrend, and as you can see there, we have seen a reaction from those average true range bands and a little bit of a rejection. So you know, anything can happen. I'm always open-minded to anything, and very happy to trade markets in both directions. I try not to have an underlying bias on anything, because it can cloud your judgment and lead you to making wrong decisions when the charts are telling you to do something different.
Okay, sure. Ken says, how do you get the ATR bands on a chart? MT4 doesn't have them as far as you can tell.
I haven't used them on MT4. I'm sure there are plugins that you can find, and if you want to get in contact with me, I can try and help you locate some that do a similar job. If not, you can find them on TradingView, which is where I use them, under ATR levels. They'll do the job for you. So yeah, I can help you find those if you want to give me a shout.
Great, just use that email address, joe.neighbour@signalcentre.com. Put it in the chat box.
Yep, great.
So you should be able to see it there. Adam has spreadsheet envy. He says, nice spreadsheet, Joseph. From Adam
you.
Harris. Adam, we're looking forward to your talk just in a couple of hours. Good to have you here. Thank you, says Ken. Very good presentation, says Akira. Steve says, just Google MT4 ATR levels indicator, and
There we
that'll
go.
bring up results
Lovely.
there. Fantastic. Well, great. Joe, it's been great to have you on again. Thank you for that. Yep, you give us a good picture of what you do and a great concise picture of the way that you trade across at the Signal Center. Beautiful chart, says Margaret. How many elements to consider for position sizing?
Sorry, say that again.
How many elements to consider for position size? I'm not sure, Margaret, if you're asking a question, maybe you're just making a statement with that.
Okay.
Good, honest trading session. Great, says Steve. Yeah, fantastic.
Excellent.
So you nailed it. Thank you, Joe.
Great. Thank you very much. Been a pleasure.